Now, Goldman Sachs is the last of the big banks out the gate. Results indeed not great. Profit at the bank fell 58% from a year ago, coming in at 308 per share as investment banking and trading fell. The results are likely to intensify the scrutiny of CEO David Solomon, who is wrestling with everything from partner unrest to concerns about strategy. Joining us now for a deeper dive is Devin Ryan of JMP Securities, Analyst, and Bill Cohan, Puck News founding partners. So Devin and Bill, thank you so much for joining us. Devin, I want to start with you with this analysis. We knew there was weakness coming into this. Was there anything that stood out to you about where in particular that Goldman went wrong?
Nothing really stood out. I mean, listen, we knew this was going to be a tough quarter and it was going to be messy. And I think that's exactly what it was. About 5% return on equity drag came from all these kind of unusual items, the marks on Green Sky and Marcus and some other marks in their equity book in asset management. And so those are items that, hopefully we don't see every quarter. And then, really the story here is going to be, one, do the capital markets recover? And we can talk about that, but we are starting to see some green shoots. So I think that's where the conversation is going to go as the day goes on here. But, it was a messy quarter directionally as expected, but, they have to, I think, own some of that. And so here we are.
Here we are indeed. Hey, Bill, it's good to see you. Devin doesn't sound that negative here. I know there was a lot of pressure and discussion over David Solomon's leadership going into this. As somebody who has tracked this company for a long time, do you think he is in jeopardy?
Well, Julie, it's nice to see you too. Look, when it comes to Goldman Sachs, where there's smoke, there's fire. There's been a lot of dissatisfaction during the course of this year with David's leadership. I think it's kind of crunch time. I think this was sort of a kitchen sink kind of quarter where they took their write down on Green Sky. They took their write down on their commercial real estate holdings. They've obviously dinged their net income significantly. Their revenues were down, but their expenses were not down nearly as much. So if David hasn't righted this ship in the third and fourth quarters, everything that I'm hearing is his tenure could be in jeopardy. But at the moment, I think he's okay. But he's got to get this thing back into a much more Goldman-like framework in the next 2 quarters.
Devin, I got to ask you, you did give the caveat about capital markets recovering and when do they recover. But with Goldman in particular, has it lost its edge given these results, or do we think this is kind of a one-off?
So you actually peel back the onion, and their market share is as good as it's ever been. They're actually still gaining share virtually across every business, and they're building in more stable businesses as well. Asset and wealth management, they're still seeing nice growth there. Their financing revenues are growing, which are stickier. This is really a function of the capital markets have been shut for the last 18 months, and Goldman is the most levered to that theme. People quickly forget how good 2021 was, and Goldman significantly outperformed, and everything looked great. We've been the opposite side of that trade for the last 18 months. To give you just a couple stats, equity issuance, if you just look at a long-term trend line, equity underwriting revenues would have to increase by about 60 to 70% just to get back to a long-term historical trend line, looking at 30 years of data. For M&A advisory, the long-term trend line of announcements relative to the first half of this year would have to increase by over 50%. So those are 2 big businesses for Goldman. It just gives you a little bit of an order of magnitude of how tough they've been. But if those recover, I think that takes care of a lot of this, I'll call it noise on the outside. It's just been a really tough backdrop, and Goldman is entirely levered to, essentially investment banking and capital markets.
It is entirely levered to that. But Devin, it tried to be levered to the consumer as well. And that seems to have been kind of a spectacular failure, no?
Yeah, I think it's definitely been a failure. It's a long conversation, I think, around what happened there. I think the market mood changed. Consumer is a business that, they probably would have had to build out for 10 years to get to the scale that would be relevant to Goldman. And that's the journey they were embarking on when interest rates went from 0 to 5%. and there was no appetite in the market for companies, whether it's within Goldman Sachs or a standalone tech company or consumer-facing company, to lose money. When that appetite changes, you have to make decisions. And so, that was a big driver of kind of paring it back. And this was going to be a really long build, and the market, I think, and investors lost appetite for that. And clearly, I think some internal friction as well, because capital markets were performing so well, and this was kind of dragging down overall results. It's a small fraction of what Goldman Sachs is and would have been for a number of years. So we're not losing sleep over it. You just need the capital markets to recover here, and that'll take care of a lot of the issues.
Bill, I want to ask you, what would it take to restore confidence in Solomon as a leader?
Well, I think, Devin is absolutely right. I mean, the capital markets have to improve. Goldman is highly levered toward investment banking. That market has been in the doldrums for the last year or so. He's trying to clean up the consumer banking foray. I mean, look, I can't blame him for trying that. Goldman is sort of in a box with the Federal Reserve. They can't really do what they need to do strategically because the Federal Reserve won't allow that kind of merger. They really need, a much bigger deposit base. They need a bigger commercial balance sheet. They need a lot of things they can't get just through organic growth. So David was trying something. He's gotten a lot of flack for his DJing and his use of private jets and sort of extracurricular activities. That's probably unfair. The stock is held up okay, but here's the thing. I think what we're seeing right now is a huge bifurcation in this market where you see, people with the big balance sheets, JP Morgan Chase and the deposit base, Bank of America, throwing up pretty amazing earnings under the circumstances. JP Morgan's net income was $14 billion. I mean, Goldman's was just a fraction of that. I mean, what you're seeing is this bifurcation where these companies that have a huge deposit base where they're paying nothing for those deposits can lend that money out at huge spreads with the rising interest rates, and that's just gushing to the bottom line. Goldman doesn't really have anything like that, and even in markets, they're paying up for those deposits much more than JP Morgan Chase or B of A is. So, they're in a bit of a box, but David's got a couple more quarters to figure this out. If he doesn't, I think the old guard is going to make a move.
And Bill, sort of on a related note, I remember when Goldman was the killer, right? It was just sort of
Absolutely.
The bank to be feared. And I guess that's a legacy of my coverage of them in particular during and after the financial crisis. Did they ever reattain that?
I mean, Devin is right. I mean, 2021 was an amazing year. I mean, more profits than, you need to sort of look over a 2 to 3 year period and then aggregate the profits. I mean, they sort of brought forward a bunch of profits that they've been missing out on lately. But in 2021, I think that, Goldman used to be able, Julie, you're absolutely right. I mean, obviously I wrote a book about it. They figured things out. They've always been the best at figuring things out, no matter the market conditions. And I'm wondering if they're figuring this out at the moment. It seems to have lost its swagger, its luster. It's still everybody wants to work there. Harder to get a job at Goldman Sachs than it is to get into Harvard. But I mean, still, they're not as feared like they used to be. People are fearing JP Morgan Chase at the moment. They're fearing what James Gorman has done at Morgan Stanley. But at Goldman, I don't know. And it's not the Goldman it used to be. Can it regain itself? Can it regain its 2021 swagger? My bet is it can, but, time is running out on David.
Really interesting perspective, both of you. Thank you so much. It's very helpful. Devin Ryan, JMP Securities Analyst, and Bill Cohan, Puck News founding partner. Thank you.